Hello, this is the U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, November 18th, 2013, ending on Friday the 22nd. Hope you had a good trading week this last week. We certainly did. Wrapped up options expiration for the month of November. Hard to believe there's only one expiration left in 2013 as we head into the final holiday stretch here. Just to lay out some calendar work, Thanksgiving is next week, not this week, the 28th. That's going to be a real short week, obviously. The biggest travel day of the year is that Wednesday. People leave early. Markets are closed on Thursday. They do reopen for a half day Friday that almost nobody trades. So really, it's just Monday and Tuesday next week, and even those can be a little light. It does tend to be a very positive week. So if you're around, it can be easy to make money on some breakouts. But this week will be the last week of November in terms of any real trading. So let's get a look at what's coming. Here's a look at the S&P 500 index. Made a new high, closed at the highs of the week on Friday on options expiration. We got a nice options unraveling move on Wednesday that made us a lot of money. It was real clean. Started after that last hour's play or first hour's play and took us straight into the close. Now this is interesting. The Nasdaq 100 index on the daily chart had that 13 sell signal back several weeks ago now, and you can see the pink risk line, which is sort of the stop out line of that signal, and we're right up against it here. We have not broken it yet, but we are right up against it. So this is a real interesting area for the Nasdaq 100 index. Here's a look at the SOX, the semiconductor index, and you can see here right at highs as well, still under the risk line from that 13 sell signal that occurred around the same time. Here's the biotech index, has recovered back to highs. It'll be interesting to see if it can break out of this triple top formation as we run up to the static trend line of the last 9-bar move down. You can see on the move down, it was a very technical move. We had a 9-bar move up, and we had the red line because of it. The pullback took us right to that red line, and a 9-bar move down. Now we've turned back up and made it to the green line, which is the static trend line of that last 9-bar move down. So very technical action back and forth. Can it break out? Remember, banks and biotechs tend to lead the market. If we get a breakout here, nothing but positive. Keep in mind, you're also into that time of year at this point where stocks that are up for the year, people don't want to sell. They don't want to lock in their tax gain. So it creates sort of a lack of selling, which often leads to higher prices, especially on those stocks. Let's take a look at some of the key stocks that we trade. Here's a look at Apple. Been hanging over 500 now for a bit. Got crushed at one point recently, but came back a little bit. So at this point, I would say, let's take a look at it on the weekly, for example, just so you can see what I'm talking about. Obviously pulled back from last year in September all the way until July of this year. It's now back to just barely positive for the year. So I wouldn't count this as a stock that's necessarily going to benefit from a lack of selling at the end of the year. On the other hand, you've got something like Amazon making new highs once again. There's the weekly chart of Amazon. Been up for the year. So maybe a lack of selling pressure there for the next couple of weeks. Netflix, the same way, had a very strong year. Came into the year around 100 after getting hurt last year. Now at 350. So again, lack of selling most likely for the rest of the year on Netflix. Let's take a look at Google. Big year for Google. Came into the year at 720 or so. Currently at 1,033. Still waiting for some big announcements out of Google in the next week or two before Black Friday of some new products. They did announce the Nexus 5 phone, which has gotten very positive reviews. And let's take a look also at Tesla, which got hurt a little bit here. But still, if you really think about this, be careful because this is up solidly for the year, coming into the year around $35 and sitting now at 135. So there should still be a lack of selling at some point on the Tesla that could carry the stock higher into the back end of the year. Here's a look at Twitter, just so you know. Something we followed since it came public over a week ago. Been holding up all right. I still wouldn't bank on it heading higher from here at this point. There's going to be some selling as some stock gets released. No rush to own this thing, but certainly holding up well, much better than last year's Facebook IPO. All right, let's go to the interweek action. Here's a look at the ES with our market directional. And you can see that for the week, we covered about 40 points of range. Came into the week. If I slide this over, you can just barely see last Friday's close. We opened at the same level on Monday. I apologize. Monday was the, we opened at the same level on Monday. And So here's Monday right here, dead flat because of the bank holiday on Monday. Really not even worth being open. Tuesday, tiny gap down. We filled it quick. Very flat action as well. And then Wednesday is the big one. Got the gap down, came back and filled it in the first hour. And then we got the options unraveling move that shot us higher the rest of the day. Had a nice move up Thursday again in the morning, although the afternoon was dull. Friday, as expected, was flat because of options expiration, although we did rise in the last hour or so. Can look at the NQs, the Nasdaq Futures, see what happened in the market there. Again, a little more positive. You can see it started Wednesday on that gap down, and then we just ran. And from the low to the high there is 80 points from the low on Wednesday to the high at the close on Friday. So real nice move there, and that's what helped us make some money, obviously. So overall, it's a positive week. Let's also take a look, by the way, at where oil went for the week. 93.70 is the close. Still looking for that to potentially come back under 90. Now, what can we look forward to this next week in terms of economic data? Well, here it is. Monday, not a big deal. Net long-term tick flows, NAHB housing market index. Tuesday, just the employment cost index, not a big deal. Wednesday's the bigger deal. Retail sales, CPI, that's all before the bell. That could cause a gap. Existing home sales 30 minutes in, along with business inventories. That's important. We've got the crude oil inventories an hour in, and we got the release of the minutes from the last Fed meeting at 2 p.m. Eastern Time. November 21st is Thursday. Again, some stuff before the market and 30 minutes in. We've got continuing claims, which is a weekly number, initial claims, PPI, not nearly as big a deal as the CPI, which was the day before. 30 minutes in, Philly Fed leading indicators, natural gas inventories, and then on Friday, just the JOLTS job openings data. So I'd say if we're going to focus on anything this week, it's going to be that middle day, Wednesday. Always expect most weeks to be a little lighter on Monday and Friday. The institutional players tend to play more on Tuesday, Wednesday, Thursday. And I think that's what we'll see because that's where most of the data is. As usual, charts brought to you by eSignal 11. We will be trading it in the trading lab. There to answer your questions and help you make money. Have a great trading week.